Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, January 27th, 5:21 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video, the Big Show edition, where we take a look back at the prior week, take a look ahead at key levels for next week, and update the world famous 21 over 21 leaders list. Let's get right into it. State of the market, uptrend, an uptrend that got a little bit stronger again today. We're keeping caution on there until we get through the FOMC meeting and tech earnings next week. Caution might, another reason for caution staying on there might be because how we reversed today at 4,100, which has been this is the third time we're unable to get through 4,100. We'll take a look at that when we look at the charts. Let's go over here to the trend gauge. You can see market leaders in bullish slash uptrend, definite leadership in the market. And then on to the 5 major indexes, all 5 are trending above their uptrending 21-day exponential moving average, above their medium-term 50-day moving average. All now have at least 2 closes above the long-term 200-day moving average. Some of the slopes of the line are almost flat, just barely trending down by a couple of pennies a day, but we need those to flatten out and hook up to get into our fully bullish mode. That's just one of the rules of the trend gauge. What happened today? Another positive day, but as I mentioned, a hard reversal when we approached that 4,100 level. Tried to get through it twice, couldn't do it. And then over a 0.5% breakdown in the last 30 minutes of trading. Not the way we wanted to go out for the week, but after a strong week, it's typical for some profit taking into the weekend to take place. So here are the numbers. G6 up 1.07%, led primarily by the formerly beleaguered Cathie Woods. She's not beleaguered anymore. She's up over 25% year to date. Led by Tesla, her biggest holding. She's consistently got a 10% holding in Tesla come hell or high water. That was up 1.07% on the day. The other 5 components combined up approximately 0.4% on average. So minor bit of misleading data there. S&P 500 up 0.25%, NASDAQ 100 up 1% even, Dow barely positive up 0.08%, mid caps up 0.4, Russell up a little more than 0.4, global diversified 60/40 down 0.06%. Let's see, foreign stocks and emerging markets lagged today, and so did bonds. So 60/40 weak on the day. In-house GROTECTION up 0.34%. We'll take a look at our trades in our portfolio when we get to the tail of the tape and the 21 over 21 list. Let's dive right into it. We'll start off with why we do what we do here at Revere. Downside protection and upside participation in the market. That's growth during uptrends. That's the growth part of GROTECTION, and protection during downtrends. That's what we spent most of 2022 dealing with. When the indexes are trading above, I can't believe I finally get to say it here, trading above all of their moving averages. All we need now is for the 50-day to get above the 200-day and the slope of the 200-day to turn up, and we'll be in fully bullish mode here. That means that the numbers, the indexes will be trading above their uptrending 21-day, 50-day, and 200-day moving average. I haven't been able to say that since late December, early January of the prior year. I should say late December of 2021. 2022 was horrible, but we survived it. We protected capital, and now we're ready for the next bull market. We've always been ready for it. We dipped some toes in the water here when we came off the lows. We tried again here when we came off the lows, and we're trying again here. This doesn't look as big as a move off the lows, but leading stocks are acting much better than they did either during this rally or during this rally, and that's why we track leading stocks separately from the market indexes on our trend gauge. So good stuff here on the S&P 500, but let's take a look at something I didn't like today. So uh, we gapped down, opened down about a 0.25%, immediately rallied up to 40.80, pulled back to 40.48. Pretty normal at this point, 40.52 being an inflection point on yesterday morning's highs, and we bounced up there just like we should have. Then we started to rally again, got up to 40.80, couldn't get past it, pulled back to 40.69. Then we did get above it. Let's go to a 1-minute chart here, and I'll show you what I really didn't like, actually. Got above 40.80, got above 40.80, pull back, tried 40.80, failed, tried 40.80, failed. We're above 40.80 now, 215, off to the races, right? Pull back, 40.80 held. Another burst higher up to 40.94. Well, let's try a pullback. Well, as long as 40.80 holds, we're okay, right? Bounced at 40.84, up to 40.90, lower high here now, and then into the close. Heavy selling down here through 40.80, and not even a bounce into the close. Again, it's been a good week. Profit taking into the close of a week after a strong week isn't surprising. There are just a lot of market participants that like to lock in their profits, and it all happened in the last 20 minutes of the day. But this is a very, very minor change in character where when we get past all week long, we got past levels, back tested them, and held. Not this time, but closed at 40.70. Is it the beginning of a pullback? It would be fine with me if it was. Here's 41.01 that failed on 12.1. Here's 41.01 that failed on 12.13. We got within 6 points, 7 points of 41.01 today, and reversed going into the close. Closed mid-range. Maybe time for a little bit of a sideways action. I would actually prefer that. Arguably, this is a cup pullback with handle that we broke out of. It's too short for a formal one that we back tested the handle twice and then broke out to higher highs. But really, all we need to watch is for pullbacks to recent support areas on the way up. We want them to hold. We want 40.50 to hold, and then we want 4,007 to hold. 4,007 is a key fib level. We battled around it here. We battled around and failed at it in January 17th and 18th. Battled around here on the 23rd, the 24th, the 26th before finally getting above it and holding it on all the pullbacks. But so those are the two levels on the downside we really want to hold is 40.50 and then 4,007 on the downside. So that's what we'll be watching next week. That'd be a normal pullback going down to there. After all, this is about a I think a 5.7% move up off the lows, a normal pullback. And you could argue, it's not really straight up. We had this gap down and positive reversal here on the 25th. But off the lows, a 6% move up in 6 days is pretty good. I mean, you don't go up 1% a day in the market consistently, quite obviously. So it's a natural spot to pause here. We'll see what next week brings. Leaders definitely acting well. NASDAQ 100 leading and acting well. Second close above the declining 200-day moving average with some pretty good strength today, led by Tesla, but Apple also up over 1%, Amazon up 3%, Google up 2%. Nvidia up 3%. The big boys in the Nasdaq 100 are carrying the water again, and because of their heavy weight, if this goes up, it benefits the indexes and certainly the overall market. So there's your Nasdaq 100. Let's go to the Dow Jones Industrial Average. Relative strength line continues to lag. That's not necessarily a bad thing because when you're rallying, usually the Dow lags. It's a more defensive index, and the NASDAQ 100 leads, and that's what we're seeing from a price standpoint. Everything's fine on the Dow here. Couldn't close the week above this 34,000 level. That would have been nice, but there's 6 straight up days, true positive closes on the Dow. That's not something you can say for the S&P or the NASDAQ. How about mid caps? MDY. Minor relative weakness over the last week and a half. Nothing major considering that it was showing relative strength for the prior 5 weeks. Higher close, Uh, ran into the high today was 479, so this 483 from back here in August held, but we're above this 475 level. So a breakout on the week held for mid caps. We have a position in MDY. Small caps, we have a position via TNA. High here 190, closed at 189. 53, so just below this high, above this high, so but not above August. So uh, right there with the November and December highs. This is a normal spot for small caps to pause to with these three prior peaks since November. So those are the big indexes. I'll show RSP equal weight up less than the Nasdaq 100 did hold this cup and handle breakout. I'm sorry, the S&P 500 market weighted uh, did hold this cup and handle breakout on Friday. Minor relative weakness after a pretty decent period of relative strength versus the S&P 500 QQEW. Still showing relative strength versus the S&P 500, not as much on the versus the Nasdaq 100, but certainly a good close here and looking good. QQEW up 0.74% on the day, lagged the Nasdaq 100 slightly. Let's move into some other indexes, and we'll start with the VIX. Off of the lows, but made a lower low and then bounced, and its bounce coincided with the market selling off late in the day, but below the declining 50 and 21-day moving averages, getting into oversold territory here. So we'll be looking for a stochastic hookup. The stochastic hookup doesn't necessarily mean that the trend will change. Note how the stochastic hooked up uh, here here and here and here, and it still stayed below the 50-day moving average and played ping pong with the 21-day moving average. So we are looking at these intermarket correlations. UUP, the dollar, above the 8 EMA, no, right on the 8 EMA, a penny below the 8 EMA today. Tried to get above it. It was stronger earlier in the day, faded with the market getting stronger, but a tight range today for the dollar. Still, the dollar up. You would expect gold and silver stocks to be weak today, and they were. There's GLD, second day of its pullback, closed below the 8 EMA. Nope, still above it. Funny. But it looks like the slope of the line rolled over and the stochastic is rolling over. Might be time for a rest here on gold. Doesn't mean that it's over. Again, you can see over here, we played ping pong with the signal below overbought, but we continued to trend higher above the 21. We might just need a pullback to the 21 on gold. Gold and silver stocks, GDX. Closed mid-range, stochastic rolling over, down 1.4%. Two-day pullback after making a high, normal behavior. SLV down 1.4% on the day. This is choppy and trending lower, and it coincides with this lagging. Bounced off the 50-day, 21-day is flat. Really thought silver would continue to move here, but this failed breakout on 1-3. It really started to lose relative strength since then. How about bonds? Well, we'll go to Bitcoin first. BITO down a fraction on the day. It's acting tight now after its strong move last week. Let's go to bonds now. We'll start with the broad index BND, down slightly on the day. How about junk bonds? Junk bonds down also slightly on the day. Bonds trading in a very tight range here. LQD corporate bonds. Same thing with the tight range, down slightly. TLT, the 30-year, down slightly. Stochastic has rolled over in a tight range below the 200. If this was down, this means that the interest rate should be higher. First, the 30-year yield up just barely. Getting above the 50-day moving average would be a change in character here. And TNX, the 10-year, up, ran into the declining 21 and reversed. So those are the major indexes that we cover at the beginning of every video. Now we will go on to the tail of the tape and then the 21 over 21 list. Note the stochastics on the dollar and the TNX yields are negative, meaning not positive for stocks, owners of stocks, not positive for bulls. VIX 1851, fear and greed unchanged. I didn't uh, touch on AAII yesterday. The bulls were actually lower by approximately 3% versus last week. So the market went higher, bulls went lower. The bears were up by about 3%, and I think down 1% on neutral. So uh, not certainly not excessive bullishness here by any means, with bears still being stronger than bulls. This is a retail survey, by the way. Bull case since the 1-6 follow through day. I took away the arrow on the bear case, but we're watching for 2-1 FOMC reaction. A little bit of news: PCE, this is an inflation indicator, was in line with expectations. One way to look at it is zero point 0.3 every month multiplied by 12 is 3.6% inflation. That's a lot closer to 2 than the 7s and 8s that we saw earlier in the year. Day count from 3 out of 5 to 4 out of 6 up. 6th day above the 8 EMA and the 21 EMA. 15th day up since our follow through day on 1/6. Big event next Wednesday, FOMC. Expectations positive coming in today as long as we're over 4,007. Positive close on the day, but as I said, that hard reversal near 4,100 echoed here. Reversal on these levels for the S&P and the NASDAQ. Let's see what else is key here. Biotech's XBI, not the big cap biotech. Solars, CKY, those are the tech indexes, and real estate were strong on the day. Semiconductors because of Intel's terrible reaction to earning. Oils, basic materials, and then PUV. Those are three defensive sectors. Staples, utilities, and healthcare lagged also in the day, as well as emerging markets and foreign stocks. Here's our focus list. Some of these are not in the 21 over 21, but I will go over them. So changes in-house today, we added to XBI on its early strength. It then pulled back and closed about where we added to it. We bought AI. We'll look at the chart, and we sold JP Morgan because it's a laggard. Plain and simple, we compare everything. The chart looks fine. Let's take a look at it very quick. The chart looks okay, I should say, not fine. We bought it in anticipation of follow-up strength on this big positive reversal off of earnings. It then proceeded to suck for 3 days, bounced at the 50-day moving average, and now it's been up for 6 straight days, barely up, and in fact, not even performing the S&P 500. So sold it for about a 1.4% loss on the remaining 1.5% position, clearing out laggards in the portfolio. There are a lot of things working. And in fact, there are many financials that are working that would frankly fit better than JP Morgan, the way it's been acting lately. Added to XBI, and then we bought AI, as I said. So bottom line, 6-day, 5.4% rally off the lows, paused near 4,100 resistance. We'll watch for that 4,100 resistance as well as the support levels next week. Before we get to the 21 over 21, a couple of tickers in here that I want to be aware of that are not in the 21 over 21. Bros, we like this story a lot. Broke above the 200-day moving average today. Note the big buying on this off the bottom, including today's action. Let's look at the technicals here. 58 on the 3-month. That'll be higher after it gets updated tonight, with it being up 4.8% on above average volume. So I wanted to point out Bros. I wanted to point out ALV. I don't know anything about this company. But this was a nice gap up today, up 9% on an earnings report, 219% above average volume, clean breakout above the base, nice fundamentals, PE of 19. We need to look into this one a little bit more. And then two negative reactions to earnings. KLAC, this is also another reason why the SOX was down on the day, down 6.9%. on its earnings report. Numbers don't look bad. Uh, Forward guidance, not what the market was looking for. And Intel, it's another reason why you can't hold stocks forever. Intel finished at the top of its range, was down over 10% at one point, but down 6.41% on 326% average volume. Let's look at a monthly chart of Intel. Uh, so all the way back in 2000, this topped at 76. It took 20 years for it to get back near 76, still didn't top. The high here of 68, it's now trading at 28 after a brutal 2021 and 2022. Uh, Enough said about that. You just can't hold things forever. Even tech stocks, technology changes so quickly, and AMD just played second fiddle to them for so long before passing them up. And same thing with Nvidia. They're just two better companies right now than Intel is. All right, let's get to the 21 over 21 list. First, we'll talk about what we punted off of last week's list, and I actually felt bad about saying goodbye to one of them. And that one was Alta. Simply because we bought some things that are above the 21, they should be in the 21 over 21 list. Very minor, very subtle on Alta, but for one thing, it's almost hit pivot plus 20% over close to the maximum period of time that you give it to do that. There's a reason why this is on there as long as it is. Uh, two new highs in price not confirmed by relative strength, so it's not outperforming. Still riding the ADM higher. If you owned it, there's really no reason to sell it. But something had to go, and Ulta drew this short straw. Uh, as I said, really subtle underperformance here. But the length of time it took to grind this 19% gain out of there, it says 18% in 54 days. We want leaders to do a little bit better than that. But all in all, it's been on there for a while, and it's fine. It's just that something had to go for the new ones coming on. NVO really didn't deserve to get booted off either. It's still above the 21, but a big negative reversal here. Earnings next week, still holding the 21. Stochastic rolled over. Um, a little bit of distribution over this past week. It's had a nice run also. It took uh, 41 days, so about 37 days for it to get to its pivot plus 20%. So punting that also. MDGL, probably the first time that three stocks that are above the 21 got punted, but this has gone nowhere since this fourth day up. Yes, you could argue that it's just forming a flat base, but this is still a speculative stock, and it just doesn't seem like they want to bid it higher than this. Relative strength starting to roll over the last week. The stochastic rolled over also. Tried to break out higher twice this week, failed both times, and then finally broke the 80 MA today. Volume light, but just seems like maybe they need to start producing their earnings, or somebody has to come out and upgrade it, or something with the story. But MDGL punted also. And finally, Schlumberger, we're 4 for 4. This didn't need to get punted either, but I moved, and I explained earlier in the week why I moved from Schlumberger and/or Halliburton into OIH. Single stock risk for the same return as the ETF. You go with the ETF, and that's the situation we've been in with Schlumberger. So those are the four that we punted. Here's what was added this week. AI, huge volume today, up 1,089% above average volume, up 17.84%. AI is hot. I saw positive call um, uh, data flowing into this. Other than that, I didn't see any reason for this. But AI is really starting to get talked about. It may be just similar to back in the dot-com bubble. Anybody saying we're using AI, we're using AI, may see their stocks outperform. But when I saw this volume and this move through the 200, combined with what it has been doing off of the lows, uh, we took a shot, small 1% to start. What else did we add? Well, we bought Tesla yesterday and added it. My mistake was not pyramiding more into Tesla either at yesterday's close or early this morning. But this looks like it absolutely wants to be a big leader again. I don't normally buy things below the 200-day moving average. They certainly didn't work during the bear market rallies in 2022, but this may no longer just be a bear market rally. This may be the beginning of an uptrend with us finally getting above the 200-day moving average. And if you thought yesterday was good, day two volume above day one volume is a very rare thing to see after something gaps up on an inflection point. Very rare. Like I said again, we should have pyramided into this, but let's go back. Do we no longer have a chance to get into it? No, we don't. Let's take a look at 1024. We'll take a look at 1031 2019. Last time Tesla had a gap up on earnings. Here's the gap up, 29 million shares. Then the next day, day two, up even bigger on even more shares, even more volume. Day three made a higher high and pulled back, just got a little bit extended. And then it started a very nice pullback into the 8 EMA before it started taking off again to the upside. So this is what we'll be looking for. A pullback either to the 5 or the 8. This is very clearly a volume leader. Look at how volume dried up during the pullback here. Uh, so no, we didn't miss it. We're in it small. We'll have a chance to get in it again as long as the market continues to hold up. And we've got the precedent of what it did on an earnings report in 2019. We know the personality of the stock and how it moves big time when growth stocks are in favor. Elon talked, answered a lot of questions, whether you believe him or not, in their earnings conference call. I heard it was one of the best calls that he's done in a while. And whether you believe the story or not, the price and volume is what we're going by, and that's why we're in it. So Tesla, the next ad. So where are we? That's two. The third ad this week, Shopify. Big liquid leaders is the name of the theme for this week's show, and this is one of them. Big move up. This is actually a false candle. This is the flaw that they had at the open on Tuesday. So it didn't really reverse that hard. It was more of a lighter volume pullback. Then big volume came in on Wednesday when they upped their prices. If How confident do you have to be about your business if you raise prices going into the face of a recession, and two higher highs after that? So this is another one we're looking for low risk entry points on. Shopify, big liquid leader. I've said it once, I've said it 1,000 times. The uptrending markets love big liquid leaders because you can pile into them if you're a fund manager. And the fourth ad for this week, no, Melly was actually on last week. So Mercado Libre, this is another big liquid leader. $1,221 stock, but the average 50-day average volume. I mean, it doesn't trade that many shares, 557, but it's a $1,221 stock. I don't like that. I wish they'd split their stock. But 663 million in daily dollar volume is extremely liquid to get in and out of. And this is another case where it tried to break out twice, failed. The third time was a charm, as you can see by the last three up days on Mercado Libre. Moving on, First Solar, 2 rough days today, but closed at the highs for the week. Netflix, another big liquid leader. Nice volume dry up on the pullback. If this touches the 8, we may take a position. RVNC, very strong. Nice move out of this base last week, follow-up strength this week. Volume patterns are near perfect. AEHR, we sold out at 34 when it was very extended. It won't even give me an opportunity to get back in. It's touched 34 twice, but it's still being like 3 ATR extended from the 21. Right now, it's less than 2.5 ATR extended from the 21. So risk coming down for entry points on AEHR. XBI, tried to break out here, flagged for 4 days. Need to see some more relative strength into this. We've got a 6% position in this. OIH, this is where we got rid of Schlumberger and went into OIH. Oil's underperformed today. Chart looks good though. Uh, Las Vegas Sands, sometimes stocks after a big run, they report earnings. It's a selling opportunity. Not for Las Vegas Sands. That's another flag or another feather in the growth bull market cap. In 2022, this gap up would have absolutely been sold off, but it not only sold off, but made a day two higher high this week. GDX Gold, as I said prior, taking a little bit of a break. Nike also taken a little bit of a break, just really going sideways for the last 3 weeks in relative strength, waning a little bit. Um, Frankly, I could have gotten rid of this instead of Ulta, but Ulta was at the pivot plus 20%. PIC continues to act fantastic, riding the ADMA higher. General Electric, another one, breakout after a good earnings report. Crocs, pulling back on a relative and price basis also. Stochastic has rolled over, would hope for a bounce at the 21 if you're long with this. Caterpillar, these 3 days, I kind of took it off my watch list or my focus list, bounced at the 21 and then 6 straight up days. Earnings next week. Um, Apparently a big beneficiary of the laughably named Inflation Reduction Act. Lennar, continues to act great. We saw some good earnings from a couple of home builders this week. Shift for payments, payment processors are acting good. Oh, I wanted to show this. Visa. Are we in a recession if a stock like Visa gaps up and holds the gap on 70% above volume, above average volume? No. And American Express today also. Look at that. They've also got the travel component. Would a stock in travel, and they said they've got their highest card usage. I'm not sure if it was in history or in recently, but I saw the phrase highest card usage thrown around, up 10.5%. These are financial stocks. They're credit card stocks. They are supposed to represent consumer spending, and this is saying that we're headed for a soft landing. Um, Okay, shift for payments. We showed that. I got off on a tangent. Five Below continues to act nicely, trending higher after its earnings gap on its last earnings report. And finally, Boeing. We've got this is our largest individual holding. After volume drying up and a big move up on earnings day as after it sold off initially and then closed at the high of the day, really hasn't done anything in the last 2 weeks. Very tight or the last 2 days, very tight range today on volume drying up, looking for a move above the highs of the earnings day for us to make this a slightly even larger position. Yes, I realize that it hit pivot plus 20%, but this is basically a 3 weeks tight in theory, if not in name. I mean, they say it's got to be a 1% close, but you're looking at 4 tight weeks here, top to bottom. Sometimes if it's a little more than a percent, you can make exceptions, but that's the way I see this here. And if I'm right, we'll add to it, and if I'm wrong, we'll get out of it. And that's your 21 over 21 list for the week ending January 27th. Did I show this? This is why we protect the downside at Revere. We might be retiring this sheet if we go into a full-fledged bull market. I don't make predictions either way, but this is why we protect the downside and participate in the upside. And if you're interested in this approach, reach out to me, Don at revereasset.com, or the phone is 855 Real Wealth. That's 855-732-5932. My partner, Dan Stewart, will answer that. The king of all things financial. Look out for our podcast this weekend. Some really good information on there. And with that, I am going to wrap up the week ending January 27th. Remember, it's not how much you make in the markets, it's how much of that you can keep. We appreciate your listening and have a great weekend. Just the facts here at Revere, no opinions, facts, data, theses. Anytime we have a thesis, it needs to be supported by facts, and those facts are price and volume. Have a great weekend, everybody.